welcome to the trade. US manufacturing contracted for the ninth straight month in November, with factories facing slumping orders and higher prices for inputs as the drag from import tariffs persisted. The Institute for Supply Management's manufacturing index eased half a point to 48.2, with the measure remaining below 50, which indicates contraction. And US consumers are expected to spend more than $14 billion on Cyber Monday. That's according to Adobe Analytics, after a strong Black Friday weekend that saw wealthier customers spend freely and lower income shoppers hunt for deals. Americans are expected to spend around 6% more online than last year's Cyber Monday. That's traditionally the country's biggest online shopping day, and the culmination of the 4-day shopping frenzy that begins the day after Thanksgiving. And US online spending on Black Friday hit a record $11.8 billion and $23.6 billion for the weekend overall. That's up about 6% from last year, according to Adobe, which tracks 1 trillion visits to shoppers that make to online retail websites. And US Treasuries have fallen, pressured by weakness in Japanese and European government bonds, following comments from Bank of Japan governor, who signalled that conditions were aligning for a possible rate hike. And the US 2-year Treasury yield rose to 3.54%. The 10-year yield lifted to 4.09%. Australia's 3-year government bond yields have risen to 3.96%. The 10-year yield is at 4.61%. And the US dollar index is little changed. The Australian dollar is trading at 65.4 US cents. So let's get across the charts now with Peter McGuire from trading.com. He's the chief executive. Thank you so much for joining us. Now, Bitcoin, it's fallen below 85,000 US dollars.
Absolutely, Sue. I'll tell you what, it's been dynamic. Down 17% for the month of November, which is really telling. And it just had a fall yesterday of just on 6% odd. So that's, I think, taken everyone by surprise. It seems to be the oversold market. I would say that, you know, a lot of traders, probably margin calls and so on, are now licking their wounds. But there are plenty of other markets that have shown extraordinary growth. So it's a time of consolidation. Are we going to see that those lows that we saw in April of 74,000 taken out? I think it's open to the markets to decide which way, up or down.
Well, it certainly had a big fall in a short period of time. So what's driving that?
I think a lot of things, Sue, when we look at it, Bitcoin plunged, as we mentioned, its steepest fall since March. It's really a consolidation, strong resistance at that 20-day moving average. Are we going to see that fall continue? You've got the technical indicators, you've got the stochastics and the relative strength. We're looking at Fibonacci. All of those composition of technicals tell us a story. And one can't discount the fact of 17% down for November. So I think we'll probably see a continuation as far as softness until we see some form of support level.
Do you see any more liquidations?
I do. I think that people probably, possibly the bulls, are going to get squeezed. It's like, a little bit of a short squeeze with big falls like that in an intraday trading session. I feel as though you probably, they'll look for other opportunities. And people have only got so much horsepower as far as financial ammunition, so they'll look for other markets that are showing opportunity, the likes of silver and gold.
Well, let's talk about gold. It's holding above 4,200 US an ounce.
Incredible. I mean, what we've seen in the last probably 5 or 6 trading sessions, also its little brother silver up the best part of 10% since Thursday. So the chart tells the story, Sue, and gold has just been incredible. The upper Bollinger Band, that's 42.60, hitting a 6-week high. You've got weaker US dollar, and we're all worried about, or not worried, but probably mindful of that US, the Fed decision next week. Is it going to, if they do cut 25, Sue, will we see a massive push up as far as precious metals and risk back on for the equity markets? So there's the storyline, and you've got it boosted, markets are pricing in an 87% probability of that rate cut. So all of those factors need to be, I think, observed and appreciated. This time next week tells a story.
Where do you see gold going then?
I think I won't be surprised to take 4,500 out by end of month. I think the overall momentum has been very, very strong, and silver is proving that as well. Silver's approaching 60. I called it the other day on Thursday. I said that was at about $53, $54. I said I won't be surprised to take that 60 handle out at the highest ever, and it's approaching that. It's over 58 now, so it'll drag and drag gold up. So I think 4,500 is a key number that is probably achievable. We're 4 weeks till the end of the year, and I think it's going to be a very dynamic December.
And what's your long-term price for gold?
I want to get through 5,000. I think you'll be there by end of first quarter. And I'm very interested to see from the Trump administration situation what they're doing in 26. I think we're in for some really incredible times. And I feel as though that whole gold and precious metal market is really going to come into its own. Silver's up nearly 100% for the year, so we can't discount the move.
Now, what's happening with the US dollar and the Swiss franc?
Well, that leads me into that's why, because it's a gold-backed currency. So US dollar, I think that will continue to probably have softness, as we all know, because of rate cuts and the consideration there. Stochastic oscillators are flatlining in an oversold area. Strong support could be found at that 78.30 to 78.70 level, Sue. And I feel as though the US franc has been trading sideways around that 80-20 mark over the last 3 days, remaining low or below its prevailing trend line. So we've got investors are realising what's going on as far as dollar. Everyone's mindful with the gold-backed currency being Swiss franc. And the overall theme, I think, is going to be one of strength for the Swiss franc against the dollar in the short to medium term, because everyone's mindful what's happening with bond rates and what's happening as far as Fed policy. This is a big month, and what we'll see, I think, will be very exciting.
And a possible big month or year for Japan. We heard the central bank governor say that flag higher interest rates.
Exactly.
So what's happening with the Nikkei 225?
Well, you've got strengthening yen. You've got the Nikkei there is very interesting. It's been in a consolidation phase, really, from that 48,300 to 50,500 range over the last 11 trading sessions, Sue. Technical indicators point to a neutral picture, and the RSI has just crossed below the 50 neutral level. So I think, when you look at the MACD, looking as far as policy from Governor Ueda, I'm expecting stronger rates, possibly a handbrake as far as growth for the Nikkei, but it's had an extraordinary year. At that 50,000 mark, the acceleration from 40 to 50,000 was unheralded. So I think you'll see a strengthening yen, probably risk off as far as equities, and let's just see where we are in the first quarter.
Okay, thank you so much, Peter McGuire from trading.com. Now let's go to a quick break.